Happy Thursday, everybody. This is Dr. Jeffrey Scott, and this is my Market MRI Pro update for Thursday, August 21st, 2025. Take two since the first one didn't come out from my video processor. Oh well, second time's always better, isn't it? Um, I called today an indecision day. I'll show you why. Everybody's awaiting Powell, who speaks tomorrow morning at 10 a.m. Futures are mostly flattish but mixed. E-mini Nasdaq's down 20 points. The Dow's up 33, S&P's up 1, and the Russell's up 3.8. After hours, there hasn't been a whole lot of activity. Four major earnings plays. Intuit was up 5.5. Workday, excuse me, Intuit was down 5.5%. Workday minus 3.2. Zoom was up 5.6, and Ross Stores was up 2.3. Again, my name is Jeffrey Scott. My email address is marketmripro@gmail.com. My Google group is Top Down Trader. And I welcome you to today's video. If you're new to my channel, hit the subscribe, hit the alarm. And if you are not part of my Top Down Trader group, why not? You get all kinds of free stuff if you join, like free education, free discounts. You get access to my videos when I don't post them anywhere else, and you don't pay anything. That's what free is. Yes. All right. Educational purposes only. Anything I talk about should be taken the setting for as education and not investment advice. Intent of the videos to show you how I use my tools for top-down trading. Trading involves risk. Unit owners solely responsible for any investment decisions you make. I may own or intend to buy or sell any stock mentioned in the report. Trading stocks and options should be considered risky. You should always consult with your financial advisor before making trades. And I have tools for multiple platforms, but I am an independent trader. My Google group is called Top Down Trader. As I mentioned, it's free, FREE, no cost, never charge. You sign up by going to Google Groups, put in your Google ID, go to all groups, find Top Down Trader, let me know how you want me to contact you. Why should you sign up? You get advance notice of my videos. You get videos when I don't post them on YouTube. You get access to me in an email forum. You get to hear from other smart traders. You get discounts when you buy my stuff. I mean, why not? Um, Enough of that. I love teaching. I get rave reviews whenever I do my programming, but I have no mailing list because I've never bothered. I do once or twice a year, I'll do training once in June in Orange County, and then I share the podium with four or five others. And then I like to do one in the back half of the year in Florida where I live by myself. So October 26th and 7th, which is Sunday and Monday at the Marriott Palm Beach Gardens, two packed days back to back. In that you could go to John Person seminar on Friday and Saturday, October 24th and 25th. Separate fee, of course. If you come to mine, it's $12.50. All meals are included plus snacks. I'll give you a $400 rebate towards any of my tools, and that I'll leave that uh, rebate open for at least a year. Any of my tools that I can control price, I'll put it that way. Hotel is a full service Marriott, 155 a night. Reach out to me at marketmripro@gmail.com. I will put a payment link in the remarks section. A payment will trigger an email to me, and then I will send you an email with the information about how to get the discount rate at the hotel. No news scheduled economic news on Friday, but Powell's speech at 10 o'clock will move the market. Everybody's going to be trying to hear whether he's talking rate cuts or not. Probably won't even talk about it, and we'll skirt around it and leave everybody the same as when he started. I mentioned the earnings tonight. We got BJ's tomorrow morning. It's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. And lastly, the E-index, which is a vehicle where we take leaders at a given time when a market's moving aggressive to the upside. We make a artificial list of those leaders, and typically this will break down as it did on Wednesday before the markets break down. This is telling me to be very concerned. Now, the interesting thing is we had a hammer yesterday, and today we had an indecision bar. So I think, like the markets in general, everybody's waiting to see what happens with Powell. More information, any technical issues with the product, coding at marketmripro.com. If you want to talk to me about the product, if you want what your price will be. If you want to register for the meeting, any information, just reach me at marketmripro@gmail.com and think about joining my Google groups. All right, this page here is called the daily briefing or something like that, the daily brief. And it's going to be on one of my computers all day long because I can update it real time just by hitting that when I have a chance. And you'll see today VXX volatility was up 1.5%. The dollar was up 0.5% at the top of its bar. So that's a very bullish day for the dollar. And you can see the Russell was up 0.26. The rest were down between 0.31 and 0.46, and Bitcoin was down 1.86. Still positive on the new highs minus new lows on the NYSE and the NASDAQ, but barely. If we look at the S&P 500 stocks to see where strength was, it was energy and materials. Weakness was in staples, utilities, and discretionary. So the defensive plays that were working so well the last day and a half did not work so well today, despite the markets trading down. As far as what themes were working, marijuana continues to run. It's been up 77% from little to bigger than little because most of the stocks are very cheap in the last 20 days, 125% in the last 50 days. So Trump must love marijuana. Other themes, uranium, silver, gold, Chinese, a lot of different China plays, but China discretionary, Norway, I guess a heavy material, heavy in the gold and silver and oil, biotech, copper, China internet, MLPs, metals and minings, genomics, and the numbers start to drop. What bothered me was only 40% of the stocks were up the S&P 1500, 50% in the NASDAQ, and 46% in the NYSE. At best a neutral day, and I think you could see here it was very mixed. Certainly wasn't a big bullish day, but it wasn't a big down day either, so I guess we can thank that. If we look at the timing model, the weekly model, just looking at the line underneath the charts is green for the spiders, Qs, diamonds, and Russell. So the dominant theme is still saying the market goes higher. The really long-term theme, which is monthly, also is bullish. The fly in the ointment is the shorter term daily has now gone into a sell signal on the spiders and the Qs. So when my timing model long and intermediate term is long and my short term is starting to go bearish, we're pulling back in an uptrend. A pullback could continue to the point where you set lower lows and you now start calling it a downtrend. So I can't say that we're not going to go much lower from here. My belief is that we pull back 3 or 4% more at the most, and then we go on and test new highs. And it's not to say that we don't take a further drop during September. September and the back half of August are weak times in the year for the market. October, where we've had some huge declines, is actually an okay month. And then November and December are great. So my hope is that we have higher highs at the end of the year, but we're going to see some volatility before we get there, as we have been seeing. If I go into the US index charts, and you can see here in white line is the 50, which is underneath the spiders, the Q daily, the diamonds, and the Russell. If we pull back, and for most of them, that's probably 2 or 3% away. That was kind of my target if we pull back. No one says we have to go that far. When you look at today, you see a doji bar on each of these, except for the Russell, which had a nice recovery day after opening lower and closing at the high of the day. Volume was lighter today, and as we've talked about for days, we're in a negative seasonality time in the markets, and this red and green line is a 5 and see, it's 10 years in red, 10 years here in green. It's a 10-year seasonality prediction. Volatility was up today, 5.8%, as you would expect, in another, kind of a rough day. And then you can see the dollar took out this line in the sand and is poised, I think, to go significantly higher here, at least to go up and maybe threaten that 200. A weak dollar is probably good for many U.S. companies, but it's bad if you're buying things that are from overseas. So we'll see. I know a lot of people like a strong dollar. I seem to make more money in the stock market when the dollar is weak. Commodities. You can see gold had a down session, down 0.35, gap down, traded lower, yet silver was up on the session 0.5 something. Oil is bouncing off the 200, but has a long ways to go to get me to believe in it, up 0.83. Speaking of long ways to go, natural gas is still dead, which doesn't totally make sense to me because you're going to see some strength when we look at the markets today. Oh, I didn't want to hit that, my bad. In in some of the liquid natural gas, but I haven't totally figured out how that relates to traditional natural gas prices. But you could see be a nice ski slope um, down. Hard to be excited about natural gas here. And then if you want to be concerned a little bit, let's take this down to 100 bars. Both the 10-year here up 1% and the 30-year, although it's a doji, was still up 0.55%. We're up in the markets, and that 30-year is not that far from 5. And all it takes is the wrong thing said by Powell, and we break 5%, and the markets do not behave well when that happens. Look at some more of the um, breadth indicators, the buckets, pretty much no signal. Market breadth, we can see that the NYSE opened, graded much lower, and made up over half the gain. Here, not quite a hammer, but down on the session on lighter than normal volume, as was the NYSE, which gave us a nice doji. When we look down here, the stocks above the various moving averages, makes a lot of sense at extremes, meaningless in the middle, and they're meaningless. There's no signal there. When I look at new high, new lows, both positive, again, the left is the NYSE, the right is the NASDAQ, both the composites. AD lines negative on the NYSE, surprisingly positive on the NASDAQ, and up-down volume is positive on both with no other signals. When I look over at the market breadth, new high, new low, you could see that we're coming off that overbought look on the spiders down to 0.87, 0.49 on the NASDAQ composite, 0.63 on the Russell, and 0.68 on the S&P 1500. That is a 13-week new high, new low indicator. If we get into deep sell-offs, we start talking about oversold, and that's when it starts getting less than 1%. So at the top, it's an overbought. At the bottom, it's oversold. So my gestalt on the markets is an uptrend under pressure, and with a pullback, and we'll see how far that goes, and does it turn into something worse. On a individual sector analysis, we look at ratio charts. Each of these, except for the upper left, is a S&P 500 sector with a ratio chart versus the spider. I am looking for things like you see in discretionary, some big strength after weakening before. You could see strength in communications. Financials are trying as well. And healthcare, which has basically been dead, has actually had a nice move off of its lows. Staples, utilities, and real estate have tried, but except for utilities, they seem to be weakening, and tech remains the longer term leader. If I go and I want to do some looking at stocks, I go into the JAS layout. As you can see, there's 3,500 plus stocks. Sometimes there's more. It is all the stocks in the NYSE, the NASDAQ, and the Amex filtered for $1 and 100,000 shares. And when the market is bullish, the list gets bigger, and when it's bearish, it gets a little bit smaller. I like my top-down tool because it includes all of those stocks, and every stock in my data set has a sector and an industry group, so it's much broader than the S&P 500s. So here they are ranked by one-day return. So the top 3 sectors were basic, materials, energy, and consumer cyclical, which would be the discretionaries. These are then all the industry groups in those sectors, and I could just pick the top 10, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, and that 242 stocks represent the top 10. When I when you don't see a name, it typically means there's some warrants or something that we haven't put into the right industry group yet, so I just skip it. Now, I don't want to look at 242 stocks, so I'm going to come in here and I'm going to put a $5 and a 500,000 share filter on it, and voila, it's dropped down to 158. Lots of ways to dissect it from here. One of my favorite ways is to add another filter, which is called a pullback and uptrend filter, and then rank them by the number of up impulses. Let's just see what we see. Rent the runway. I don't know anything about this. I think, was it recycled clothes or something? But this thing's been dead for a while. Massive volume move. Is it earnings? Five? Nope. Is it a takeout? Recapitalization plan. So, all right, doesn't sound that attractive to me. You will see on this list TNK, TK, Frontier, DHT, STNG, INSW. These are all shippers. And when I see that many in the same place in my bullish scans, I think something's going on. TNK pays a dividend of 7.5%. TK, I don't have fundamentals on. You can see TNK. Let's just bunch it up some. Not the prettiest chart, but these never are. Kind of a rounded bottom and a breakout here with 2 days in a row, the momentum, breakout volume, and a CPR with relative strength and OBV breaking out. Frontier also pays a sweet dividend. You can see 13%, like that a lot. And again, coming off some lows, but breaking out in the seasonality looks a little bit better short term than the market's DHT. And now I'm just interested which one of these pays the sweetest dividend, 10.7%. STNG, Scorpio Tankers pays 3.46. INSW, International Speedways, pays 16.08. Okay, so I'm not telling you which one to buy, but there's something going on with shippers. Flex LNG is an LNG shipper. Move up sideways at a breakout, two momentums in a row. That looks interesting to me, especially in the context of the shippers, 13% dividend. And down here is another one, GLNG, Golar NG. But show me the chart or not. Um, Something's going on with the shippers, and maybe it'd be worthwhile to roll the dice. People who watch me for a long time know I like buying options, but if I'm buying something because it's got a 13% dividend, I'm buying shares. I'm not buying options. I don't get the dividend when I buy options. This is one I had been looking at up here a while ago, and it just broke above this trend line. Hey, pretty nice looking, isn't it? What does it pay a dividend? 2.36%. Well, right away, I think I found a story there, and that story is shipping. Um, how about gold? There's a bunch of gold in here as well. Sandstorm gold, nice uptrend, little pullback and a breakout. KGC, one that I've been in and out of and talked about. Big base, big move, sideways, and looks like it's going again, a lower cost. EGO, El Dorado Gold, one that I still have a position in. I could argue that today it broke out. All right. What else? Alamos Gold, clear breakout today. HMY, Harmony Gold, Newmont Mining. Ooh, what a beautiful looking uptrend. Um, so there are two major wolf packs in this list, shippers and gold. I could also have just looked at the top 10 industry groups and I would have added some others, insurance, medical distribution. And one thing I would have noticed was another group that I like. We talked yesterday about Cencora, which is COR. I know it's in here somewhere. Let's see if I can find it. Nope, I thought it was. let's see, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. I got filters on. I'm taking off my filters. That was the problem. If I go down here, somewhere, Sencora. I talked about this group because this is a group that typically has very, it's a constant turtle. Oh, that's Carter's? No, that is Sencora. I don't, here it is. It says Sencora now. Breaking out here had a bit of a reversal today, but you put this on a longer time frame, major uptrend, kind of goalpost here, inverted M, whatever, W, but I think it's getting ready to break out. It's got good seasonality. The other one that was on this list here that I liked was McKesson. And again, over a longer, this doesn't look great right now, but stick a weekly on it. It looks pretty darn good, doesn't it? This is just, these are two stocks. Both of them are a little bit weaker right now, but in the setting of challenging economies, drug distributors do just fine. They make just a few pennies on every drug they sell. The more the drugs cost, the more that they make. And so new drugs, expansion of utilization, long-term bull cases, I like McKesson as well. Now, lastly, if you're not a top-down person, you just want to find what's moving now, what's exciting, go back to my impulse list and let's filter. Filter, $5, 500,000 shares, and the secret weapon, 2 days of up momentum. Get a small list, and this is where I like to play. Here's TNK. Once again, here's that little tanker with the 7.5% dividend. PIGR, FinTech Holdings. I think it's a Chinese fintech play. It's in a very nice uptrend. Its seasonality, short term looks okay. And it had today two momentum, squeeze, and volume in a CPR. DRD is one of the gold plays. NSO is an online, I think it's a teen retailer. I don't know much about it. It's an ADR looking thing where it's very gappy, but breaking out today, buy at your own risk, close at the bottom part after the gap. Frontier, we talked about, one of the shippers with a big dividend. AMLX, I don't know this healthcare company. Um, Sideways move. I look up here and no earnings today. I can go here to the news. Earning August 7th. Um, High risk pipeline with strong upside potential. I could always click that. And if I had time, I could read the Seeking Alpha story. So I'm not going to pass on that one. FLNG, another LNG shipper. Okay. AGI, Alamos Gold. ABVX is a healthcare IPO. Don't know anything about it, but it's got the two momentum bars or dots. MUX is a miner breaking out there. MH is a IPO and ARX is an IPO. I think right now what glitters are shippers and gold. Have a great day in the market. And if you're looking for some stable things in market turmoil and you got to be long, I always like Syncora and McKesson and Cardinal Health. Thanks, everybody. Hopefully, take two took because I'm too tired to do take three.